India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me Nigel D'Souza and Prashant as always. And what we've got is a fairly sort of calm morning and nothing unexpected. And sometimes, Nigel, that's not such a bad thing, right? Along expected lines.
Well, that's right. Surabhi, good morning. And in fact, if you wanted action, you've got plenty of it today. You've got earnings that are coming out there.
Yeah.
The global markets as well will be reacting to what the Fed had to say. There's the monthly expiry that plays out, and it's 2 days ahead of budget. So, fasten your seatbelts. You've got plenty of action in the next 2-3 days.
Already dizzy. So much going on, right? But at least the events are getting done one by one. So last night's event obviously was the Federal Reserve meeting, went along expected lines, no change in rates. Some volatility on Wall Street, a little bit of a sell-off, but then finally a recovery. So again, while the picture on the street was negative, there was red color, but it was off the lows of the session. So that's the good news. Lots to talk about today. Prashant, good morning.
Morning, Surabhi. Morning, Nigel. And Fed was a non-event, right?
Yeah.
Absolutely
Yeah.
non-event. It's very few times that you have a Federal Reserve meeting and, people are saying, so what? Is that kind of but it was expected that it's likely to be a non-event, and thankfully that's the way it panned out. So that's point number one, because there are a few other cues that we want to get through as well. Equities initially reacted to the hawkish tone of the statement, the Fed FOMC statement, because they removed the phrase "inflation is making progress." Yields went up, equities were down more. But then during the press conference, a couple of times, more than a few times, Chair Powell indicated that the removal was not meant to send a signal, a specific signal. I mean, the phrase inflation making progress, removing that is not a signal that inflation is not making progress. He then went on to explain how, the rental component, etc., is softening. That's the more sticky part, etc. So markets took note of it. Equities actually came back up, and I'll get to the price action in a bit. The other was mega cap tech earnings, which came through as well. And these are tentative stock reactions, all post-close. Microsoft 5 down, Tesla 4 up, and Meta about 2% higher. And I think over the next 1-2 hours or so, because there were conference calls which were happening, and I think the full import of what happened in those calls, etc., will come through. The number one talking point in those calls, of course, is going to be DeepSeek, and whether these companies which have guided for tens of billions of dollars in capex will need to pull some of that back. Because you don't need that much capex. As the Chinese have shown, you can do a lot with a lot less. So I think we'll have to. This is still an evolving story in that sense. This is, the change post-close, and those numbers are changing as we speak. Now, the overnight close of the main indices, S&P down 0.5%, Nasdaq about 0.5% lower. This is, of course, much improved compared to where we were at one point in the US session. Dollar, again, 2 days now, dollar is flat and the 10-year is flat as well, nothing at all. And of course, oil prices 0.5% here, 0.5% there, nothing meaningful, which then gets us to where we are here as far as India is concerned. So we saw follow-up buying, and we closed around the highs of the session, unlike the previous session where actually the market came off quite sharply from the highs. So 23,163 is where we left off. And I said this yesterday that, time for a little bit of sort of repair and recovery, and I think that is essentially what we've been seeing for the last two sessions, from the lows day before yesterday and from the start yesterday. So next levels for the Nifty, at least, just markers are 23,356, 20-day, and then the 40-day exponential, which is 23,600 roughly. These are the two numbers on the upside. And I don't think, for today we need to worry about the lows, but I think because there are big events, which can cause big swings, like for example, the union budget day after, that low still is in reckoning. 22,786 is that number on the lower side, which should not be broken. Nifty Bank closed around the 20-day moving average yesterday. So the pace has been quicker here because the RBI intervened on liquidity. The 20-day stands at 49,191. We left off about 30 points under that level. And the next number is 50,077, which is the 40-day exponential moving average for the Nifty Bank. Low, corresponding to the Nifty on the Nifty Bank is 47,844. So that's broadly the picture. GIFT Nifty will tell you what the open is looking like. It's absolutely flat, 10 points or so higher is what we have. Lots of individual stock action, which we will get to in a bit from now. Surbhi.
Yes, Prashant. Sometimes uneventful is good. I
Yeah.
think the markets had a lot of noise and news. So the fact that the Fed meeting was along expected lines and we didn't have too much of move in either equities or, treasuries or the dollar perhaps, that's quite okay. This morning, cues across Asia are thin because of the Lunar New Year holiday. Plenty of the markets like, China, Hong Kong, Taiwan, South Korea, most of them are shut or are, only partially working couple of hours. The big ones are showing up a mixed picture for the time being. Australia is the one market that's been trading, and the other one's, the Nikkei in Japan. And those markets have been extremely range-bound. Nikkei is absolutely flat. Australia isn't doing much either. So not too many cues from Asia. Which brings me to the oil markets, actually. I was watching the oil inventory data out of the US, and there was a drawdown. Stockpiles were, however, still higher than what was anticipated. And that's been the case last couple of weeks. And if you map what Brent has done, yesterday oil was, by the way, down over 1%. Now this morning it's flat. If you map what oil has done in the last 2 weeks, it's quite dramatic. Brent oil moved from a high of 82 to just about 75 now, which is fantastic news for us here in India. That's an 8-9% drop in a matter of 2 weeks. So pretty significant. So let's keep an eye out on that. Coming to the situation here back at home, yesterday was a much needed relief for the bulls, a day of recovery and a very broad-based recovery. It wasn't just the Nifty, it was spread across sectors, it was spread across market capitalization. The mid-cap market did very well. We had the market, thumping the table on good numbers, and we haven't seen that in a while. So numbers made you feel good as well. And the bulls will hope for more of that. The only caveat is today is Thursday. It is not just weekly expiry, but it's also the monthly expiry. So brace up for some volatility, especially in the second half of the day, perhaps. Let's come to the flows picture. FIs are still selling. Nothing has changed here. Almost 2,600 crores of selling yesterday, and about 1,800 crores of buying from the domestic institutional side, which is telling you that yesterday's recovery was hinging more on the other category, the unmapped data, so to speak, individuals, large HNIs, family offices. Perhaps that's where the money is also finally beginning to come through. Lots of results in focus, and just sort of a quick curtain raiser to our top 10 segment. On Bajaj Finance, people are going to now argue. They've guided for lower growth next year. They're talking about 25% AUM growth. And a minor sort of, increase in the gross NPA levels, slight increase in credit costs. So let's see how the market deals with this. Tata Motors is an operational miss. There's pressure on the margins, not looking too good. But at least they're retaining their targets on JLR in terms of turning net cash positive, etc. So let's see. Blue Star is strong. It's a good set of numbers. You'll hear from the management on the show as well as we go along. And the margin beat is almost 40 basis points. So it's looking really good. Voltas is a miss because their unitary cooling product segment, which is basically their AC segment, the revenue is fine, but there's a serious pressure on margins over there. So we'll try and find out what went down over there. And SRF, very interesting. I'll watch for the chemical stocks because Nigel had flagged this off yesterday in closing bell. A couple of the chemical stocks like Deepak, as well as Ami Organics, I think it was, they all came out with good numbers. Now SRF is keeping that trend intact. Good numbers from this one after a while. So let's see how the market reacts. So I guess a lot of individual stocks in focus, but Nigel, then it's also expiry day. Anything can happen.
Well, that's right. And the thought that came to my mind yesterday, because it went viral, was the great Rakesh Jhunjhunwala, what he used to say, right? When a stock doubles, you need to have patience out there, and you need to have conviction. But when it halves, you need to have the stomach to take that.
Yeah.
So you need to take the blows if you want to have those multi-bagger. Just thought I'll put that on board as well. But today, well, it's a big day, as you said, weekly expiry. But before that, the government intent is giving you signs that maybe, in fact, this budget could actually be good. And I'm just latching on to something that came in from the Finance Ministry overnight. They said that they've approved a scheme to strengthen the MSME manufacturing sector. Well, you could say it was expected. Well, you could say that, in fact, it's only been approved. But at least it's giving you that intent that the government is focused. The government is focusing on capex, on the revival as well. And they're noting that there could be a bit of a problem on ground and they need to do something about it. So that's raising hopes that maybe this budget 2025 will have something to offer both for the economy as well as the markets. Let's get to the data points then. Today's the end of the series. The January series hasn't been a great one, but we have pulled back from the recent lows in the last couple of trading sessions. We're going to end with a cut in all probability. But can the bulls end with a flourish? They'd like to do that. So we'll have to keep an eye on that front. Rollovers a little bit higher, both on the Nifty as well as in the Nifty Bank in comparison to the average of the last three series or so. So both of them come up for you on the screen. What do the FIs do? Well, again, the net short positions have come down. But as I've been saying, there's an element of short covering, yes. But there's also that element where, in fact, the lot size has been regrouped. And for the next month, for example, the Nifty lot size will be 75. And for this month, it's around 25. So that's why that element of, of a change in lot size as well is in there. Shorts continue to remain at around 75% or thereabouts. So these FIs are still net short. If you can get some positive news, you can get some couple of announcements coming in there, monetary policy as well as support in the budget 2025. These FIs are going to get stumped on the wrong side. That's the hope, at least as of now. Options data comes up for you, and the nearest two strikes that were active in trade yesterday, they come up for you on the screen. And since the 23,150 call was fairly active, the levels on the upside are very, very important. So the Nifty Bank yesterday did quite well. It clawed up close to around 300 points or thereabouts, and it ended at around the 20-day MA. So that's important. You'll want the Nifty Bank to build on from here. While the Nifty, it's around 150, 200 points away from its 20-day MA. The bulls would like to get closer to that mark. So these are the crucial levels. The recent lows become your reference point. But as I said earlier, the intent coming in both from the RBI as well as the government, I would take that as a positive. If we are seeing a slowing economy, you want the intent to be positive. And that's precisely what we've got.
All right, Nigel, thanks very much for that. Well, the Fed left its policy rates unchanged. And of course, there was not very much new to learn from what he said. It's largely a wait and watch stance. Listen to a quick soundbite of Fed Chair Powell.
We are looking at the data to guide us in what we should do. And, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy is in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Well, there were lots of questions about, President Trump asking him to do stuff and lower interest rates. And as expected, he didn't say very much. Not appropriate. And, that's to be expected. Well, Drew Pettit is with us, Director, U.S. Equity Strategy and ETF Analysis and Strategy Research at Citi. He's with us. Drew, great to have you back on the program. Thanks very much for your time. So I don't know if you should even touch upon the Fed. Is there anything new at all? Did we learn anything new?
I think you guys pretty much nailed it in the open of the show. No, it did feel like a non-event. The one thing I would say is that's really good news that it was a non-event, because I think leading into this, the U.S. market was actually more susceptible to a move higher in rates than it was maybe, say, a month or two ago. So honestly, non-event in rates after you had a little bit of that volatility in the middle of the day. But we kind of saw once it settled back down, equity markets came back off the lows of the day.
Okay, so what's keeping you busy in terms of tracking markets? Is it? By the way, let me ask about this entire AI thing after DeepSeek. I mean, what's the view? Latest, where are we at in terms of evolution of that view? Initially, it was a shock. Then it was like, okay, it's going to democratize the use of AI, lower costs for everything. We've had numbers from Meta, Microsoft, Tesla. I've not seen what they've said during conference calls, etc. But what's the view?
So honestly, our view hasn't changed. I think if you're going to position in a disruptive and new technology, you want to have exposure across the value chain. The thing is, when we think about the U.S. market and stocks, we've been talking about NVIDIA and semiconductors for over 2 years now. But what we were seeing is opportunities in the creators, let's call it the application layer, like software, for example, and then some of the end users. That can be industrial companies and other types of companies that are going to take AI products and integrate it into their own products. That could be a car, that could be a better robot in manufacturing, that could be in navigation, for example, and make their products better. So what ended up happening on Monday is that AI trade punished the enablers. Anyone building data centers themselves, or semiconductors. It didn't really hurt the software creators making applications, because as you said, lowers your cost base, makes development easier and faster, and it actually helped some of the end users who were up on the day. So it was an AI sell-off, but it was a very concentrated sell-off.
Sure, yeah, and it's always, someone's loss is someone's gain, as they say. So even if you move to lower chip prices, the rest of the AI chain can probably benefit. And I completely concur. I've been hearing that view as well from a couple of experts. So understand that, Drew. But tell us, where are you putting the money? Beyond U.S. equities, are you looking at any other market? How are you looking at the rest of this quarter, say, in terms of just your deployment strategy?
Yeah, so funny. I'll give you something within the U.S. that I think is really interesting. Healthcare. So it's funny here politically, people have been worried about the healthcare names, but honestly, they're not priced for any good news. I think some of the pharmaceuticals in the United States basically just have to sell their current portfolios at expected rates to really make these stocks work. So I think healthcare and pharmaceuticals in the United States are an interesting trade to think of throughout this quarter. And then thinking globally, to answer your question, I think barbelling the United States with Europe, that's been our call. I think that's where you get value. Europe provides you value. Its revisions have really stopped moving lower. I think that is the opportunity, if we get a bit of a cyclical rebound there at really low valuations, to get a tactical bump if the U.S. hits some volatility like we expect near term.
But that's really interesting, Drew. So to play that tactical balance, you're looking at Europe and not, the original favorites, emerging markets like India or China, which are both not doing well. I mean, we would take that. But Europe over some of these other themes?
Yeah, honestly, it really comes down to revisions have not been worse. Positioning also very, very, very net negative. So if you're looking for a value trade, that's where you have the most leverage. I really think our colleagues in Europe have really spun this very interestingly, because right now, like if you're looking for growth in the world, the growth engine has been US mega cap. It's been in the US indices. So in a sense, emerging markets gets you more cyclical structural growth. The United States, it really gets you this tech and thematic growth. So the barbell with the most leverage, honestly, we think is Europe right now.
All right. Hi, Drew, and good to see you, Ben. And you've maintained that stance, right? Neutral on emerging markets, while you were relatively more positive on US as well as Europe. Where does India fit into this piece? Because from the time you had that neutral stance on emerging market, and India included, we have pulled back a few percentage points. What will make you turn your attention to India?
Honestly, I think a lot has to do with how really Trump and U.S. policy plays out from a global trade perspective. Honestly, when we think about markets globally in the U.S., right now it's kind of currency volatility that gets us nervous. And it's not so much backward looking, it's what can happen, forward looking with tariffs. Because honestly, we don't think markets globally have really priced in tariff risk. India could be a big beneficiary of that, especially if China, for example, I would say gets targeted more aggressively in tariffs, which seems to be the rhetoric. But honestly, right now, I think a little bit of a wait and see, more of a neutral stance in emerging markets makes sense until we really work through some of the potential headline risk coming out of the U.S. government.
Absolutely, Drew. And we just want to end with that, exactly that, whether you've been able to do the math around this and put any numbers to the tariff headlines that we have right now. So 25% Canada, Mexico, then I think he's at 10%, China to start with. What does all of that do in terms of just the implications and the impact on U.S. equities? What's your base case model on tariffs and the market impact? So
a little bit of back of the envelope math, because the problem here, when we think about the U.S., it's really a stock by stock problem. A lot of people have gone down the path of, some companies buy a lot from international sources. Maybe they're targeted, but if they're buying from an international source, manufacturing and selling in an international country, it actually doesn't get tariffed. So it's a little bit messy. Services don't get tariffed, goods do. So that's another thing we have to factor in. But high level, we think for every 10% increase in import price inflation, you should get 200 to 300 basis points of gross margin impact in the US market. We're going to have to narrow this down on a stock by stock basis. But where I think investors and where we want to look near term for impacts is in DXY, the US dollar index. So as the dollar index strengthens, we actually think that's a net negative for stock markets near term. And on top of that, let's go a step further. keep an eye on implied volatility on the dollar.
Right.
Because I think if that rises, which it's come down in the past week or so, but we saw a little bit of noise around some of Trump's speeches, dollar volatility rising on top of a stronger US dollar is all equity negative. So I think we really have to kind of work through the headlines and see both of those come down to really be off to the races in equity markets again.
All right, Drew, thank you very much. Good conversation as always. Thank you for sort of taking us through all of that. Look forward to our next one. Well, what's lined up here? Lots and lots of corporate interactions, essentially. So 8:35, just to give you a quick sense of what's coming up. We'll have the management of Quest Corp joining us on the third quarter earnings. 9 o'clock, we'll have the management of Brigade. Earnings and outlook, 9:20, Gautam Shah. We talk technicals, he's a market master of the day. 9:30, the management of Blue Star about their third quarter numbers. We'll have KPIT Tech, which reported earnings. And as always, the management with us at 9:40. Hitachi Energy, the stocks, of course, sold off quite a bit. Third quarter earnings and outlook here as well. And of course, it's the economy. 10:15, Lata in conversation with folks from Stancy and Axis Bank, and of course the FOMC decision and the RBI next week.
Well, time to slip into a short break. A lot of stock-specific action to track for you in our special Top 10 segment. Here's the list. Bajaj Finance, SRF, Hitachi Energy, Blue Star, Allied Blenders. All of them will react to positive news flow. Add to the list, Solar Industries. On the flip side, you have Tata Motors, Maruti, Voltas, Wipro, Whirlpool, apologies. All of them will be reacting to negative news flow. So we'll keep an eye on them. Slip into that break, come back. We'll get into further detail on all of these stocks.
Welcome back. You're with us on Bazaar Morning Call, and the queues this morning across Asia are pretty thin because of the Lunar New Year holiday. We only have like Japan and Australia, the two major markets that are trading. Implied open is suggesting that we'll have a quiet start, but if the bulls can build on yesterday's big pullback, they will definitely like that. Let's talk about stocks because lots and lots of numbers have come through, and our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Sudarshan, Tata Motors, how is it looking?
It's a weak set of results. Earnings have missed estimates and margin has missed estimates despite PLI benefits coming in Q3 FY25. EBITDA is down 15%. Margin has come in at 11.5% versus our poll of 13.7% and against 13.9% in the same quarter last year. And that's mainly because of the demand, not only in the domestic business, also in China and Europe. For JLR, EBITDA margin is down 200 basis points and it has come in at 14.2%. EBIT margin has made a minor improvement of 20 bips and it has come at 9%. As far as outlook is concerned, JLR EBIT margin outlook of 8.5% or more has been retained. Also, companies say that cash flow positive on the guidance on cash flow positive also for JLR is maintained. As far as brokerage are concerned, they're largely negative. Jefferies has downgraded to underperform. Target is to be 660 per share. It has also cut FY25-27 EBITDA estimates by 7 to 11%. UBS has a sell call and target is to be 760 per share. It says it has ambitious Q4 amidst uncertain FY26 and 27. MS has an equal weight call, target is 853, while CLSA maintains outperform call and target is 930 per share.
Okay, all right. Thanks a lot for that. Sudarshan, not so good then for Tata Motors. But Abhishek, Bajaj Finance, good enough?
Well, a very strong set of numbers are coming in from Bajaj Finance. They have beaten our poll both with respect to NI and the PAT. So their capital adequacy ratio has remained stable despite the fact that annualized credit cost has increased for them to 2.16% from 2.13% in the previous quarter. The management did indicate in the con call that the worst is behind and now they expect the credit cost to moderate to about 200 to 205 basis point in Q4. Calculation shows that the net interest margin was largely stable at decline of only 2 basis points sequentially. The asset quality has seen slight deterioration. Gross NPA is up to 1.12% versus 1.06% in the previous quarter. In absolute value wise, 12.8% gain on gross NPA on a sequential basis. NII and PAT is ahead of our poll. Key con call highlights, they have given FY26 guidance wherein they estimate PAT growth of 22 to 23%, AUM growth of 25%, credit cost to be maintained at 2% provided that Q4 is around 200 to 205 basis points. A key highlight is the management transitions that they do anticipate. So they expect the board to take a decision on Rajiv Jain's at the group level by Q4 FY25, and that will be keenly watched by the street. Back to you.
Okay, all right. Abhishek, thank you very much for that. So Bajaj Finance in focus. Let's go back to auto, right? Tata Motors not so good. What about Maruti? Sud is here with details. Sud, back to you.
So company announced earnings yesterday. Earnings were absolutely in line with estimates, but commentary is not looking that great. As far as demand is concerned, company says demand remains subdued, and especially on the urban front. In Q3, rural areas saw a growth of more than 15% or say 15%, while in urban area, growth was just 2.5%. Also, retail growth for industry in FY25, earlier guidance for industry was 3 to 4%. As of 9-month FY25, company says industry has seen a growth of 3.5% and also expects in Q4 the growth to remain in the same range, that is not range, exactly at 3.5%. So demand remains a concern. Brokerages are largely positive on the stock. HSBC has a buy call, target is 14,000 per share. It says domestic demand remaining muted in 2025, but export may be key driver in FY26 and FY27. MS has an overweight call and target is 14,942 per share. Nomura has a neutral call and target is 13,290 per share. It says domestic weakness is a risk to watch out for Q4. So earnings were in line, but commentary is muted. That's the reason I'm going with minor red for Maruti.
Okay, of course, respect for them because they're saying it as they see it and not sugarcoating it. But yes, from a market perspective, got it. Sudarshan will keep it in mind. Maybe some pressure this morning on Maruti. Let's talk about brighter things. SRF. Upasana is here with us. Upasana, numbers better than estimates after a long time, right?
Certainly, Surbhi. Well, good morning. Companies reported good set of numbers above street estimates. This good performance was mainly supported by companies' chemical business. Now, after several disappointing quarters, companies reported a 14% top-line growth, coupled with margin expansion of nearly about 120 basis points in company's chemical business. Now, overall, EBITDA was mainly supported by packaging films business, which was offsetted by muted performance that was seen from company's technical textile business. Now, coming to numbers, revenue stood at 3,491 crore with an uptick of 14% above street estimates. EBITDA stood at 619 crore, up 9%, certainly above street estimates, and which led to a margin expansion of nearly about, EBITDA margin stood at 17.7%, down about 18 basis points on a Y-on-Y basis, while street was estimated somewhere around 17.3%. PAT stood at 271% with an uptick of 7% on a Y-on-Y basis. And mind you, management has indicated that it is seeing gradual increase in demand in the chemical business and has also indicated that fluorochem business saw strong support from refrigerants. So overall, good set of numbers from SRF.
All right. Thank you very much for that. Let's talk about Hitachi Energy next. And by the way, you'll hear from the management a little later in the program as well. But numbers first. Vamakshi, morning.
Well, good morning, Prashant. Yes, the numbers look good this time around. It's an operation-led beat. When we look at the revenue, that stood at 1,620 crores. This is an uptick of almost 27% on a year-on-year basis, and it has come in 1% below expectations. But operationally, the performance was very strong. When you look at the EBITDA margin, that has improved close to 500 basis points, coming in at 10.3% as compared to 5.3% in the same quarter last year. When we look at the net profit, on the other hand, it has surged multi-fold, and this is mainly on account of notional forex gain of somewhere around 52 crores. So adjusting for that notional forex gain, the net profit stood at 85.5 crores. But nevertheless, this is still nearly 8% higher as compared to what the street was anticipating. When you look at the ordering activity, that was also quite strong. Order inflow stood at 11,594 crores. This is a massive uptick as far as order inflow is concerned. Resultantly, this led to the highest ever order backlog of 18,944 crores. So overall, when we look at the numbers for the company, quite strong, going with a green for discount on the back of that.
Okay, all right, Vamakshi got it. So blowout quarter for Hitachi Energy. We'll be speaking with the management as well, Mr. N. Venu, find out how much of this can sustain and how optimistic they are about the next financial year. We had both Blue Star and Voltas report numbers. Let's go back to Upasana for the details. Upasana?
First up, let me start with Blue Star. The company has reported a good set of numbers. Revenue and PAT in line with our poll, while margin stood above our poll. Now, growth was mainly led by companies' EMP and UCP segments, while EPC segment slumped. Now, revenue growth of 25%, which was much above the poll estimates, was led by strong festive season and robust sales in EMP segment. Now let us come to the numbers first. Revenue stood at 2,807 crores with an uptick of 25%. EBITDA stood at 209 crore with an uptick of 35%. EBITDA margin increased by 50 basis points at 7.4%. And lastly, PAT stood at 132 crore with an uptick of 32%. Mind you that the UCP segment, the revenue grew 22% to 1,160 crores on a robust festive demand, leading the overall growth. Now let me focus on Voltas now. The numbers missed the street estimates. This was largely driven by lower than anticipated UCP margins that the companies reported. Revenue in line, while PAT and margin lower than poll. Now, UCP segment revenue growth was in line at 20% on a YoY basis, but margins were weak, down about 240 basis points at 5.9%, likely on higher competitive intensity. Now, coming to the numbers, revenue saw an uptick of 18%, EBITDA margins was down 77 basis points at 6.3%, and PAT stood at 130 crore as compared to the poll of 155 crores. So all in all, weak set of numbers from Voltas.
Okay, all right. Thanks a lot for that, Upasana. And keep in mind, we'll be having the management of Blue Star as well, who will be joining us at 9:30 a.m. Let's hop across to Hormuz. He's here to tell us about Whirlpool. They sold some stake and they intend to sell more. Whoopsie daisy. Tell us more, Hormuz.
Morning, Nigel. Just a year after they did that, Whirlpool Corporation is back. They announced yesterday that they plan to bring their stake down in Whirlpool India to 20% by the mid or late 2025. Now, they also said is that they currently own around 51% stake. Now, remember, last February, they sold 24% or close to 25% stake in a block deal that was valued at well over 4,000 crore rupees. And even the CEO went on air and said that they sold that stake in the Indian unit because of high valuations. Now, they also said that the stake sale will be to ensure greater autonomy for Whirlpool India and that it will remain relevant to their overall portfolio despite the stake sale. Now, it is interesting because on February 20th, when the block deal happened, the average price was 1,280 rupees. The stock in the next 8 months went up 90%. And from those levels, the stock has already corrected almost 35-36%. So another stake sale in the offing for Whirlpool, an overhang gets created. Expect the stock to open in the red.
All right. Thank you very much, Hormuz, for that. What was that, Nigel? Whoopsie?
Whoopsie daisy.
You know, I hear all kinds of, I don't know, actually I shouldn't say it because I don't know what it means. Womp womp.
What? The whoopsie daisies I know, but I think not quite with it,
yeah, lingo,
with the times.
Next gen, new gen lingo, whatever. But, let's talk about, let's continue with our top 10 stocks here. Solar industries, right, is what we focus on. The Pinaka order has finally come through. I mean, if you remember, we'd spoken with the management of Solar Industries and they were indicated that it should be out in the next a few weeks, basically, and it's come through. Big one. Upasana is here with details. Upasana.
Certainly a big development. Now, according to ANI, CCS has cleared Army's 10,000 crore Pinaka rocket deal, and this project includes area denial munitions and Pinaka enhanced range rockets. Now, this project will be divided between Solar Industries and Munitions India Limited. And also, it has been highlighted that DRDO is in advanced stages of making 120-kilometer strike version of Pinaka rockets and expects the first test next financial year. So on back of this development, Solar Industries will be in focus today, and I expect a strong up move in the stock today on back of this.
Okay, all right, got it. So Solar, we will watch out for that, Upasana. Let's go across to Manglam. Manglam, you're watching out for Allied Blenders today?
Always good to wrap it up with a drink, right? Great numbers coming in, firing on all cylinders. I mean, there are no complaints whatsoever. If you thought of a company that reported good revenue growth, that after saw gross margin expansion, EBITDA margins expanded, then the net profit was supported by lower finance costs. And to add to all of that, they've made investments in a new category as well. All of that happened for Allied Blenders in this quarter. Revenues up by 9%, gross margins improved by nearly 700 basis points because the company has been changing its product mix and E&A sourcing as well. As a result of which the EBITDA doubled from 6.6% margins, the company has reported 12% margins. And the company reported a 57 crore profit versus a loss of 4 crore in the same time last quarter. Finance costs nearly halved because they had taken money for the IPO to repay debt itself. 13% volume growth is what the company has reported in their P&A segment, and P&A accounts for nearly 42% of sales. P&A is basically prestige and above premium products. Add to all of this was a company that made whiskey and a bit of vodka. They've gone ahead and invested 9 crore in a company which makes dark rum, premium rum as well. So all these things should work for Allied Blenders today.
They've all done well, haven't they? From what I remember, United Spirits, I think Radico's numbers were pretty decent, and now Manglam Sliger's Allied is also good.
He also said we'll wrap it up with a drink, so we look forward to that Manglam post the budget.
Well, I was speaking about people in general, Nigel, but two things that really worked well for the alcohol companies this time around. One is the seasonally strong quarter. Secondly, Andhra Pradesh opened up as well, right? So that added about 400 to 500 basis points of volumes for all these companies. And then there was some pricing, benefits coming in as well. So all of that impacted their margins too.
Got it, Manglam. Let's see when Manglam opens up as well. Thanks a lot for that. Well, time to do a quick recap of all the stocks we discussed. The ones with positive news flow: Bajaj Finance, SRF, Hitachi, you had Blue Star, Allied Blenders, as well as Solar Industries. Well, the ones with negative news flow: Tata Motors, Maruti, Voltas, and Whirlpool. That's all the stocks we'll be discussing, but Manisha joins us to tell us what's going on in the commodity space. Manisha, take it away.
Well, thank you so much for that, Nigel. I'll start with the crude oil prices, where we have seen prices continue to decline so much so that we are now trading at the lowest level of 2025. Well, we have seen the U.S. inventories gain, and that is what is weighing onto the markets right now. Apart from that, the Libya supplies have come back, and it is the OPEC and allies meeting on 3rd of February, and that is exactly what the markets are watching out for right now. But in the metals other sector as well, it really is a decline across. After the U.S. Fed meeting, we've seen the U.S. dollar strengthen, and there's little guidance that U.S. is given on future rate cuts as well. But Bank of Canada has cut interest rates, and ECB could be following suit this week itself, and that perhaps is giving some bit of a support to the gold prices. But when you look at aluminum, well, we have seen a decline. Copper is trading at a 3-week close as well. Iron ore prices have declined too. So not much of a support that we are looking at in many of these commodities ahead of 1st of Feb, and that tariff clarity perhaps could beat the prices.
All right. Thanks very much, Manisha, for that. So that is commodities there in focus. We'll come back with the management of Quest Corp to talk about their third quarter and, of course, outlook going forward. Stay tuned.
Welcome back. As promised, let's get straight to the management of Quest Corp. For Mr. Kamal Pal Hoda, as well as the group CEO, Mr. Good morning. Thanks a lot for joining in. Well, congratulations. It appears that growth is accelerating because you're. Could you tell us how quarter four is looking like? Can you continue to maintain this mid-teens growth? That's point number one. And also give us some why margins dipped a little bit. Operating leverage should play out, right?
Yeah, very good morning, Rajal. Thanks for having us on this show. Yes, Q3, we did deliver a good set of results. And just to give, despite of headwinds being specifically on few segments, that is BFSI and early dehiring post-Diwali season, despite of that, we are able to deliver a good result. Couple of indicators. By headcount, for a period of 9 months from April to December, we have added a net count of, a total headcount of about 50,000. net adds, and whereas against compared to the previous year, full year, we would have added about 56,000. So from that standpoint, we still have a headroom, left in Q4. Coming back specific to the margin question that you had, there are a few, specific indicators. First and foremost, we are investing in leadership for the season, and specifically, we are getting into verticalization, and it needs more investment on the leadership and strengthening each of the platform. Second, of course, there is a macroeconomic issue hitting us in our international geography, specifically from Singapore, which is slowing down, which is also a high margin business, impacting overall a few basis point on our EBITDA percentage. And of course, IT services being not coming back into shape completely, we are largely focusing on GCCs and other sectors. So these are few indicators as to why margin has taken, but it is still. I would still say this is an interim dip, but we will be able to regain this as we get end of Q4.
Just a couple of quick numbers. The headcount, as you said, I think it's 50,000 that you've done in the first 9 months. Last year you did 56,000. So this year, what do you end up with? What does it mean in terms of growth? And also in the past, you've done margins of 5% as well. Are you headed in that direction? That in the coming quarters, you'll get back to around that 5% margin band?
See, look, few specific indicators that we'll have to keep in mind. The GDP is heading towards its low in last 7 quarters, and it is going to impact on the consumption pattern. And most of our resources whom we deploy are frontline staffs, right? So it has a cascading effect. So from that standpoint, we are mindful that Q4 still will be slightly muted. While we might we have open mandate worth of about, equivalent about 14,000 open mandates as we step into the last week of January. But however, it's a bit wait and watch. With regard to the overall growth, I think we should still, by revenue, we will still end the year at a double-digit revenue growth and a double-digit EBITDA growth.
Okay, got it. All right. Are you looking to up the contribution, though, of IT staffing as well as international staffing, which have relatively higher margins? I want to also ask you, will Trump's policies impact your international staffing business?
It should. It is a bit early at the moment. As I said, Singapore is going through its own challenge, which is we are the largest IT staffing company in Singapore. We are seeing good traction coming in from Malaysia and Philippines. Middle East is doing well for us. Middle East, we do a combination of both IT staffing and the general staffing there. So IT staffing is picking up well there. These geographies definitely yes. But however, India is still our largest focus. 67% of our open mandate comes from the GCCs. So GCCs is seeming to be the captive centers that are being set up are quite promising, and we are seeing good traction coming in. With regard to US policy, of course, the largest IT spend, the IT market is US. I'm sure, I think, as and when the policies are getting firmed up, I'm sure it will have a positive impact on overall IT staffing, both for India as well as the US market for us.
Okay, all right. Let's wind this down then, and let's get a comment coming from Mr. Huda. Thanks, sir, for waiting by patiently. If you could tell us what is the timelines for the demerger, and also I wanted your comment. DeepSeek seems to have, pulled stock markets down, and there's plenty of debate out there. How do you see it impact your business?
Yeah, thanks, Nigel. And, on demerger, we are pretty much on track. This is an important quarter for us, Q4, wherein we expect the final regulatory approval, which is the second motion at NCLT. We are hopeful that we should be able to get a favorable order from NCLT in this quarter, which means that we're all geared up for seeing the 3 separate listed companies by Q1 of next financial year. Just to remind everybody, this is a mirror shareholding, so we are splitting the company into 3 parts. So the staffing remains with Quest, and we're creating 2 large companies, Blue Spring and Digitide, in their respective verticals. So we are hopeful that Q4, the demerger should get completed with the NCLT second motion application, and to have these companies listed in Q1 next financial year. On AI, there are considerable amount of things that we are doing, especially in our GTS vertical, where we are amongst the top 2 players in the voice, and we are looking at various AI offerings both to our customers to improve the productivity for the customers, the productivity also for our callers. And there is a significant investment that we have done, and we believe that AI will have a transformation to this industry, and we've taken our early steps by investing in some of the AI offerings for the customers.
Okay. All right, gentlemen, we'll leave it on that note. Thank you very much for being with us and giving us some sense on the business today, that is Questcorp. Let's now welcome in Deepan Mehta. He's joining us in the conversation to go through this whole raft of earnings that we've gotten over the last 24 to 36 hours. Deepan, great to have you on. Thanks so much. Let's start with Tata Motors first. Obviously, there's pressure, there's weakness, but they're still, of course, retaining their guidance and all their targets on JLR. How would you look at the stock? Deepan, you're on mute.
Sorry about that. So good morning, Surbhi, and thank you for having me on your show. I think more or less in-line numbers, but look, there's so much of volatility in Tata Motors earnings, and that does tend to affect the investors' mind. So generally, I would say that Tata Motors is avoided. As compared to some of the other auto companies, I think there are better bets over there. Maruti came with a good set of numbers, better than what I expected. And looking forward to Eicher Motors numbers, I think, which could also be very good. And then, of course, there's M&M as well, which has done exceptionally well, better than Tata Motors as well. So within the auto space, I think there are better choices. But on the whole, the industry is under a bit of a pressure and volumes are still not picked up. So I would not like to, increase exposure to the auto sector. Tata Motors in specific, I think better to switch out of Tata Motors and some of the other companies which I just named just now.
Okay. So, just to expand on that point on auto, and since we're talking four-wheelers, Deepan, now Maruti in the con call didn't offer too much comfort. I mean, they're being brutally honest, saying that demand is sluggish and slow. And perhaps, we won't expect too much of a blockbuster revenue growth. So would you look at anything else in four-wheelers, or is it better to look at maybe the two-wheeler makers?
See, I think first of all, you need to be neutral to underweight auto, but I think it's an important industry. It's a cyclical industry as well, and I think it's hit a soft bump at this point of time. So eventually it will get over this sort of slow period. Also with increase in liquidity in the banking system and hopefully interest rate cut, that certainly will benefit the auto industry as well. And they're moving very strongly on the export market and whatever they are selling to Toyota as well. So that's acting as a bit of a buffer for Maruti. I think valuations are reasonable. They're around 25 times trailing 12 month. I think it's a reasonable valuation. At a time when the earnings can pick up maybe 4 to 6 quarters down the line, if you have like a 2-3 year type of a view, I think it may outperform the market. And M&M also, I think if you look at the kind of strategy which they have in the EV space, it's the best in class. And here also they have the benefit of the tractor business, which has got higher margins. And that also is doing pretty well for the company. So within the auto space, I would say in the four-wheeler, these are two companies which may outperform. But on the overall industry, the view has to be slightly cautious for the next 2-3 quarters, maybe a little longer as well.
Okay. All right. Deepan, stay on. We have more questions for you, but we do have to take another quick break. We'll do that, come back on the other side, keep talking stocks, and of course get you the market to technical setup as well. We'll have Mitesh as well as Sudarshan join in with some trading ideas.
Welcome back. We've had a decent bounce yesterday and, from the recent lows, we pulled back a little bit. Are we good for more? Mitesh and Sudarshan, both of them join us on the show. Good morning, gentlemen. And first of all, congratulations. I recall 2 sessions ago, you all were hinting at some positivity after being a little bit nervous. The question is, where do we go from here? Sudarshan, you go first. What's the trade on the Nifty?
Yeah, good morning. Well, I'm very pleased. From Tuesday morning, we have been saying that let's go long. And luckily, this time the market obliged us. I would think that this long trend, this long trade should continue. Traders who have positions which expire today, remember today is weekly expiry, monthly expiry in options. So they should ideally roll over these positions into the next week. Also understand that markets are not stable yet, but the view seems to be that at least till budget day, that means another for 2 more days, we should see some kind of upside. So stay long, keep tight 150-point stop losses. And ideally, what I usually do is on the budget day morning, I exit all my long positions so that I'm not there for the volatility. So that I would suggest again.
Got it. All right. Mitesh, what about you?
Morning, Nigel. So, being positive for the last 2-3 days and suggesting that it will be the bank and the fin nifty which will be leading the rally. I think that's playing out well. I still hold my view. I believe that the bank nifty is still showing signs, which could lead us to a significant reversal. Though I think because we have fallen so much, while it's easy to give a pullback on a short covering basis, but with that fall, I think we have a lot of hurdles in between. So there will be steps: 49,300, 49,800, 750 zone, and then 50,000. I think these are the three near-term pivots which I'm looking at. But my bigger sense is that we'll eventually clear 50,000, 50,100 and head towards 51,500. So there is a significant amount of upside which could happen. I'll stay positive very clearly.
Stay positive. Got it. All right. What about individual stocks? Mitesh, you go first.
Nigel, I have all buy calls today. Bank of India is a buy with a stop at 108.5 for targets of 115. Kotak Bank is something which I like on the medium to longer term chart as well. In the short term, though, buy with a stop below 1900 for a target of 1960.65. A buy on IRFC with a stop at 138 for targets of 148. And Havells, after a long time, is showing signs of reversal. So buy here with a stop at 1508 for targets of 1565.
Got it. Thanks for that. Sudarshan, what about you?
Chola Finance is a buy with a stop under 1265. TVS Motors, you were all talking about Maruti and Tata Motors. I think TVS Motors also has an excellent chart. It's a buy with a stop under 2400. JSW Steel has been an outperformer. Consider buying that with a stop under 915. And finally, Balkrishna Industries has done well. These are stocks, mid-cap stocks that are emerging out of deep corrections. So consider buying Balkrishna Industries with a stop under 2680. It's an all buy list.
Got it. Thanks, gentlemen, for that. We'll come back to you all for your 9-10 call as well later in the show. For the time being, we slip into a short break. We'll get you pre-opened rates on the other side. And the management of Brigade as well is waiting for us. They'll detail the past quarter's numbers. They'll tell us what's the way ahead as well. Pavitra Shankar is scheduled to join us on the other side. Welcome back. Deepan Matha is still with us. Deepan, thanks for waiting by. Wanted your view on Bajaj Finance. That one did nothing much for the last couple of years. And in 2025, actually, it's showing signs that, hey, I'm the one that has the pedigree, I'm the one who has the class, and I'm the one who's going to, do better in 2025. Can it be the outperformer? How do you like the numbers?
Yeah, Nigel, first a disclosure that it's one of our core holdings and very impressed with the numbers. Whichever way the stock may open today, I can't say. But, the real number to look out for is the provision amount, and which was growing at 2 or 3 times the previous quarter. I think we have seen 60-70% increase over the last quarter. And hopefully that will start to flatten out. And you may see in the next 2-3 quarters or so, the top line matching with the bottom line, the growth rates. And that will mean that the earnings per share can easily grow by above 20%, more like 20 to 23% or so. And that, in my opinion, should cause a re-rating of the stock in terms of its valuation multiples as well. So within the BFSI space and the banking space, I think this is one stock which can clearly outperform. But as I said, our views could be biased because we have an ownership position. And in my opinion, I think from a safe and from a risk return profile, it could be the best NBFC stroke bank to be invested in right now.
Got it. All right. Anything else, Deepan, that you would like to highlight for us? We've got a lot of numbers from the broader markets. The EMS stocks bounced back yesterday. Some of these solar themes, they have got, hit hard. But some of them are making renewable energy stocks. They're making a bit of a comeback. Your view on any of them?
No, Nigel, I think that whatever numbers are coming through over there are pretty okay, but there is a nice trend happening in the chemical sector, especially specialty chemicals. And after several quarters, we are certainly seeing green shoots over there. And this is certainly not what I expected. Like SRF numbers were pretty impressive. Deepak Fertilizers came with a very good set of numbers. And a lot of other specialty chemicals, API, intermediate companies have reported decent numbers. So I'm just looking at that sector more closely now. It's got some amount of cyclicality in it, but I think we may be seeing an upcycle over there. So it could be something quite interesting maybe going forward, especially when you're looking out for sectors where there is still growth left. And there are very few such sectors at present.
Indeed, that's an important point, because if I look at the entire basket, it started showing some growth, and in the next few quarters, it will have the benefit of the smaller base. So that's what will further enhance that growth that we're looking at. Appreciate you joining in, Dipan. Very pertinent point you make out there. Wishing you a good day ahead. We look forward to chatting up with you in the next couple of sessions as well. Prashant.
All right, well, we have the management of Brigade Enterprises joining us now on the earnings set. By the way, the pre-open is just about kicking off, so it's at the bottom of the screen, the rates. We have, by the way, reported a good set of numbers for the third quarter. Pre-sales continue to grow, but collections have declined sequentially. Pavitra Shankar is Managing Director at Brigade Enterprises. She's with us to take some questions. Look at the stock in the pre-open, 10% higher. But this is the first tick. We'll have to see where this goes from here. Pavitra, good morning again. Prashant this side. So, I mean, third quarter has been driven by successive new launches. Could you tell us what will lead to, what's the growth trajectory looking from here? What is the expectation for this quarter, that is Jan to March, and then beyond that, FY26?
Hi, good morning. Yes, we had a really good quarter this year, and overall 9 months is done much better. For the rest of the financial year, we're just pushing through the new launches. The numbers that we'll be able to achieve are pretty heavily dependent on new launches. While we don't really give guidance, we should definitely do better than last year. But a lot of our launches are coming in over the course of this quarter. So we'll have to see how much time we have in the course of Q4 to actually achieve some of those numbers.
All right. Hi, Pavitra. Good morning. Always good to see you in. Give us a sense about the inventory that you have in your books as of now with regard to the residential space, point number one. And your collections dipped a little bit on a sequential basis. Could you tell us what's the cash flow situation?
So no real issues on the cash flow situation. There may just be a slight mismatch in terms of just realizing some of the booking value and then some of the milestones being raised, but nothing really of concern. Collections overall have increased over the course of year over year. In terms of inventory, we have about 4.5 million square feet of inventory that we're selling today, and the demand on ground is still very strong. Bangalore and within our industry, where we have a heavy focus on Bangalore within our own organization, we still see about 12 months of inventory hangover. So it's still a very strong situation on ground.
12 months of inventory in Bangalore, Pavitra, that's what you're saying?
Yeah. Yes.
And that's largely in line with something that you'd want to work with. I mean, it's perfectly fine.
Actually, it's great. I mean, the normal is, 12 months is about 4 quarters, right? The normal equilibrium situation is anywhere from 8 to 10 quarters. So we're definitely in a great market in terms of how quickly inventory is still moving. So not a concern at all.
And in terms of those new launches, could you give us a sense what are you looking at, and just some idea?
Yeah, so we'll actually be looking to launch in both Bangalore and Chennai and Hyderabad. So the great thing is that we have inventory across all of our 3 focus markets, and I want to include Mysore as well. Most of the inventory is what I would call upper mid-segment and premium housing. This is a trend that we've seen across the markets and within our own portfolio as well. There's an opportunity to expand and do more of premium housing. Overall, pricing in our markets has increased within our own portfolio 40% year over year from a mix of moving more into the luxury and premium segment. So a lot of our launches coming up. We are looking to launch about 12 million square feet over the next 4 quarters, and hopefully launching another 3 to 4 million in the coming quarter itself, January, February, March.
Pavitra, no slowdown at all at the margin or anything, right? I mean, we've had companies, but not from Bangalore, from largely NCR, companies like Signature, Ashiana, Max. They've told us over the last 2 months that at the margin, the sales velocity has kind of gone down a little bit. But that's not also at the premium end, mostly in that sense. And, there've been talk that maybe with the stock markets being a little lower, there could be some impact, some implications. Because at the higher end, one assumes that, there will be, of course, a loan element, but a lot of it also will be funded by, capital gains from equities and things like that. Just your thoughts, Pavitra.
Yeah, so I would say, many times people peg their expectations based on what's happened over the last couple of years. And what we've seen is an incredible ramp up in terms of both sales velocity and absorption, as well as price increase. Now, if you're comparing to that, that's not going to continue growing at the same rates. But to put it in perspective, we are still able to launch, I would say, Brigade, most of the portfolio, about 80% is still in the mid-segment, upper mid-segment. And I think that's kind of where you have to look at if you want to scale in terms of volume and velocity. Premium housing isn't going to fly off the shelves in the same way. I know there are conflicting reports that keep coming out, but the market for that naturally is smaller. So I think it's a balance of both. We are seeing strong demand, but it's not going to be, you're not going to sell predominantly all of your inventory in premium housing within a couple of months or anything like that. So we look at stabilizing the sales velocity for premium housing. We look at wanting to sell that inventory over the course of construction so that we can also, see the gains in pricing over that life cycle. And in mid-segment and upper mid-segment, it's still very strong in terms of the launch reaction from customers itself.
All right, Pavitra, we've gotten on enough about the real estate segment, and you're sounding very, very confident. So we take your word for that. Let's talk about the hospitality business. How are things shaping up there? If you could give us a couple of numbers. And I think you had a plan to unlock some value, right, with regard to listing that venture. What's the progress out there?
So yes, we actually did file a DRHP October 30th of last year. And because of that, we're under publicity restrictions. And I can't really talk about the portfolio in terms of numbers or give trends.
All right. But what about, when should we expect this to see the light of day? I mean, in terms of you filed the papers, when do we expect the IPO?
We're hoping soon. We are yet to have some more clarity on that, but hopefully soon.
Okay, all right. Let's talk about then your rental income. The next time you join us, I'll push you a little bit more on that IPO because the street wants to know about that, Pavitra. For now, I'm letting you go. But what about the rental income? If you could help us out, the leasing portfolio that you have, I think it's clocking closer around 290, 300 crores or thereabouts. And I think the occupancy number for the last quarter was 95% plus. How do you see this number scaling up?
Yes, so our lease rental portfolio is a big contributor to the good results over the last quarter. The portfolio is fully stabilized. As you said, we're 99% leased, despite having a huge component of SEZ rentals as well. So it's stabilized, and that's kind of why we're seeing the cash flow increase quarter on quarter. And we do have about 8.7 million square feet of operating portfolio, and we are building out additional space as well. So as of now, the portfolio is just cash flowing, stabilized, and in a great space because it's fully occupied.
Okay, all right, Pavitra, we'll leave it on that note for this quarter. Thank you very much for joining in and giving us some perspective on the business. That is Brigade Enterprises. By the way, interesting trends are playing out in the market right now. The index is flat. Nothing's happening there. Nifty is just about 6 points higher. On individual stocks, there's lots of drama. Whirlpool, for one, the market is not liking the fact that from 50%, 51%, the global parent is now going to bring this down to about 20%. Look at the pressure. I mean, it'll not happen in one go. It'll happen staggered. And they're saying, probably over the course of this calendar year. But that's a huge overhang. So that's one high drama stock. The other one is Tata Motors. Now, this margin compression, blended margins for Tata Motors have come down from about almost 14% to, a little over 11%. And the market wasn't prepared for that. And anyway, it's been a tough couple of, months in terms of sales as well. So serious pressure on Tata Motors as well. We'll watch out for these stocks and how they do once trade actually opens. But it is time for our 9-10 call. So let's go back to the experts then. Mitesh, what's the stock you're going with?
I'll go with a buy on Kotak for targets of 1960 plus.
Okay. Mitesh, actually, since we have you, just quick fire on Tata Motors and Bajaj Finance. Bajaj Finance, by the way, is up about 1% or so in the pre-open right now. These two big nifty stocks, levels to watch?
See, Bajaj Finance, my medium-term to long-term view is very, very positive. In fact, I believe this could be one of the stocks of the year. And 7,800 is a pivot which the stock has failed to clear, but I think it might do it today. Then the next target is around 8,100, and I suspect I'm looking at 9,000 plus. In fact, that is a stock I would want to add today in my portfolio.
Okay, all right. Mitesh, got that. Thanks very much. Speaking of Bajaj Finance, let's just go and revisit the numbers and the street commentary after the Q3 earnings print. Abhishek.
Well, to begin with, Bajaj Finance has beaten up all both with respect to NII as well as the PAT. There were key con call highlights wherein they gave the FY26 outlook PAT growth on the upper side to be around 22 to 23%, AM growth of 25%. They expect credit cost to remain at 2% if Q4 FY25 credit cost is sustained between 200 to 205 basis points. The key highlight in the con call was they expect the board to take a decision largely on Rajiv Jain by Q4 FY25. Brokerages who have been bullish on the stock, 5 of them have raised their target price anywhere between 9,000 to 9,300, while UBS, Bernstein and Macquarie have an underperformance or sell rating, target price ranging from 6,290 to 6,500 per share. Back to you.
All right, Abhishek, thank you very much for that. Let's talk about Tata Motors again. Hormuz tells us that below 707, the Tata Motors stock will be at a 52-week low. But the numbers and what was said, Sudarshan is here with exactly that. Sud, morning.
Morning, Prashant. So Tata Motors is seen opening 6% lower and near 52-week low. And it's after Q3 earnings that were weak. And on domestic front, it was weak because of subdued performance by passenger vehicles. And JLR made a rebound on QOQ, but overall demand concerns remain, especially in China and Europe. So overall, EBITDA was down 15%. Margin has come in at 11.5%, which is down more than 200 basis points year on year. Also down more than 200 basis points against our estimate of 13.7%. For JLR, EBITDA margin was down 200 basis points, while EBIT margin has seen a minor uptick of 20 basis points and it has come in at 9%. On the outlook, JLR has maintained EBIT margin guidance of FY25 at 8.5% or more also, but brokerages are largely negative on the stock. Today, Jefferies has downgraded the stock after 3.5 years. It has downgraded to underperform and target is rupees 660 per share. Also, it has cut FY25-27 EBITDA estimates by 7 to 11% and EPS estimates by 5 to 10%. UBS maintains its sell call and target is 760. It says it has ambitious Q4 target amidst uncertain FY26 and 27. MS maintains equal weight call and target is 853 per share. CLSA though has an outperform call and target is 930 per share, but it has also cut JLR FY26 volume estimate by 5%. So earnings were weak and even brokerages are negative on Tata Motors after Q3.
And Sudarshan, if you required to buy a Tata car last year in the middle of 2024, you should have bought the car, right? And not the stock, because if you bought the stock, then you would be down 40%. So, we normally relate that, and it's quite popular that if you bought the stock instead of the car, you would be making so much money. In this case, it's good. You bought the car, you'll have the car, you're driving to work and back. The stock, in fact, is likely to open up low. And as you said, closer to a 52-week low. Thanks a lot for joining in.
Just one more stock, beyond earnings, a non-earnings mover, Sagility. Watch out for Sagility. Sagility has acquired a company in the US for about 500 crores. And it seems that the rationale, the pricing, and then the internals market is okay with it because stock's up 5%. We'll get you more details on Sagility as we go forward as well. Recent listing, of course, and the stock has done quite okay. Electra Green Tech's numbers are stupendous. All their buses are, everywhere. Selling plenty of them. See them on the roads. And that's showing up in the stock as well. Up about 3% on solid numbers in the third quarter.
Absolutely. Let's look at, you guys were talking about Whirlpool. Whirlpool, the first tranche of sale happened at about 1280 rupees per share. When they sold it last year. That was in February of 2024. Maybe it was the market, maybe it was the stock, but I think it was more the market, right? So the 1280, the promoter sold shares, it doubled from there after a stake sale. The high was about 2450, which was made in October of 2024. From Feb to October, stock doubled after promoter pared their stake down, complaining of rich valuations, mind you. I mean, if you remember that soundbite of the global CEO saying, basically saying you got to take money off when valuations are like this, and then the stock doubled. And of course, it's now back to where it was with this 20% correction, back to, I think, 1260 or so. which is around where they sold stake the first time around. So it's interesting. Well, I think we've got the first a couple of trades coming up on the indices. It's absolutely flat, blinking like a traffic signal. 23,180. It's red and green, but no change to show on it. Nifty Bank is down about 0.25%, 49,070. You've got the mid-cap index, which is up about 0.33%, 52,880. And I mean, the other stuff coming up as well. We've got 1150 stocks which are higher and about 400 stocks which are down. And the rest of the market is opening up. So it's kind of very, very mixed out there, but more up than down, at least on the Nifty, as you can see up on the heat map. You know, that'll also change. Advanced decline is 2:1 in favor of advances, at least with respect to what's opened up right now. Surabhi.
Okay, on the large cap screen, you've got Bajaj Finance up 2.5%. So the market's being optimistic, not getting too perturbed with the slight rise in credit costs and the gross NPA increase, because the guidance is that this will sort itself out. They are not sounding very alarmed on it, and the market's kind of taking that. Even Bajaj Finserv is up about 1.5%. Other gainers include Bharti, BPCL, NTPC, Hindalco, Coal India, there's BEL. So very mixed trends. A couple of consumer stocks like Britannia and Tata Consumer are also okay for the time being. Now, on the downside, look at Tata Motors, 8% down. This margin thing, the market was just not prepped for this kind of a margin decline, blended basis and the JLR margins. 7.5% lower on that stock. Sales, we know that, it's been very sluggish, but margins, oops. Wipro, about 1% lower. Infosys is slightly lower as well. L&T, ahead of numbers, is about 0.25% lower. Then you have some of the larger banks like ICICI Bank, Axis. They're all very cautious, slightly negative to flat. Kotak is flat. Let's see what HDFC Bank is doing. It hasn't made up its mind. HDFC Bank is totally flat. Reliance is totally flat. So depending on let's look at Lever. Hindustan Unilever is also, it's up about 0.5%. So consumer stocks relatively better, but depending on which way the big boys decide to go, we'll have a clearer direction on the Nifty. But the headlines are all beyond the Nifty, Nigel, aren't they?
Well, that's right. A few stocks in the broader markets that are up and about. ACME Solar, I think yesterday the stock was up 10%. Today it's up another 10%. So big move is what we're seeing out there. Sidma, I think you mentioned that one. It's up close to around 7%. It's following on yesterday's big gains. KPIT Technologies, we'll speak to the management in just a bit. Beautiful move up there. The stock is up close to around 6%. You have Suzlon Energy up 5% yesterday. Keep in mind, it's seen a sharp correction from the top. Management is sounding optimistic, though, about business prospects. So that as well has popped up and traded. Anantaraj, after getting smacked in the last couple of trading sessions, pulled back yesterday and pulled back some more today. So that stock as well is one of the top volume movers in trade today. I think,
Hitachi Energy, 14%. Beautiful numbers, and the stock is flying. It's off to the races. And now that we have final rates on Whirlpool, maybe we can pick that up. There's just a complete, seller's frenzy right now on Whirlpool, 20% down. Straight away circuit.
A couple of other stocks as well. Blue Jet Healthcare, I think they came out with a set of numbers. Volumes are around, I think, close to around 2 lakh shares traded in the first minute. It's up close to around 10%, so you can't get in if you want to. That stock, it's closed out there. Brigade, I think you mentioned as well. Car Trader is another one that's up close to around 10%. So decent looking screen as we speak. So a lot of winners from the broader markets. Whirlpool is the disappointment. Techno Electric is down 11%. Voltas is taking it hard. You have, JK Paper as well lower. Eclux is down close to 6% volumes, though not very, very high. And from the stocks that I track as well, Jindal Stainless, the numbers on a year-on-year basis, it looks a little bit softish, but it's more or less in line with what most brokerages were looking at, whether it was Phillip Capital or it was ICICI Securities as well. It was more or less in line.
No, absolutely. And
Netweb, have you guys seen, by the way? Netweb is up, another 9%. Yeah, Netweb.
Yeah. No, I think, market, of course, it had corrected the most from 2,500. It had fallen to about 1,400 or so. And I think it's seeing a bit of a reversal to the reversal in that sense, right? So lots happening, and I think we'll continue to bring up individual names, etc. more. Gautam Shah is with us, founder and chief strategist at Goldilocks Premium Research. Gautam, good to have you with us here. Good morning. Thanks very much for your time. The market structure seems to have weakened, and we are down now. Although we off about 300 points in the Nifty from the lows day before yesterday. What's the broad sort of price action and technical view from here, near to medium term, Gautam?
Good morning, Prashant. Well, I think the key question that a lot of people are trying to answer is whether this is a correction within the larger bull market or a full-blown downtrend or a bear market that's going to continue for many quarters to come. I think the biggest disconnect for most market participants in India is for the first time, India has gone completely off track as a market. And you have the world staying very, very strong and in a bull market, whether you look at the US markets or the European markets or the Asian markets. I believe that this is still a correction within the larger bull market because I think we saw a massive run-up for about 18 months. And in that context, I think this fall is still quite normal, even though a lot of people might not want to believe the same. The real damage has really been in the broader markets because the average decline, the whole of NSE is about 28%, whereas if you look at the Nifty itself, it's fallen about 12%. I do believe we've come to a point where sentimentally we are oversold, technically we are oversold, and based on bread data, we are very, very oversold. So a deeper cut from current levels looks unlikely. It seems as if the market is stabilizing. 22,800 was and remains a very important support. We've seen some stability from that number in the last 2 days. And if the Nifty can build up from here and possibly get past 23,350, 23,500, I think all can be well very soon. And because all of our problems have been homegrown, I think what happens on the 1st of February, I think will be very critical to the overall trend of the market. So I would be optimistic. I think from a risk reward perspective, the downside from here is very limited, but as an investor, I think the upside potential is quite large. So I would be constructive from here. I think the downside is limited.
That's good to hear, Gautam. That's really good to hear. And you actually partially answered the next question that I was going to ask you. So if you could just elaborate on that, because you're saying the upside potential is large. And that's what I wanted to understand, that while the downside is protected, can we really expect a sharp reversal? I mean, the Nifty is down about 13%. So are you expecting, in the market last couple of years, it's always been a V-shaped recovery. This time we were wondering whether now you get into a longer time correction, maybe not price. But you seem to be suggesting that no, it's going to be better than that.
See, I think for the last 4 years, since the time we started rallying from the COVID lows, every time there has been a correction, we've seen a V-shaped recovery. I wouldn't be surprised if something similar happens. It's not that we've not seen corrections in the past. I remember late 2022, we had an 18% fall on the Nifty. Everybody questioned the bull market, questioned the fact that India is going to underperform, and then we came back very strongly. I think something similar can happen because I think India will have to be aligned with the rest of the world. So I think the upside potential is very large. Again, if I look at the markets from an 18-month perspective, I think there is potential 20% upside from where we are right now. And the reason I say this is because the weekly, monthly charts are all in great shape. We needed a cool off. We saw a bit of a madness, the SME space, the small cap space last August, September. All of that has cooled off. You can buy stocks at your prices, which you never got in the last 18 months. So I think from a charts perspective, your maximum downside is about 2 to 4% from here, and the upside is about 20%. So as an investor, I want to plan for the same.
20% upside over the next 18 months. This is on the Nifty, you're saying, right?
Yeah, that's correct. I think over the Nifty, I do see a possible 20% upside from here. And with global markets continuing to be very strong and with the US Dow at lifetime highs, I think the going is going to get better there as well.
Okay, we've got a headline there, 20% upside on the Nifty over the next 18 months. Nigel?
Okay, all right. Hi, Gautam. And good to hear you're sounding far more optimistic. So that's good news. I like the way you put it. Downside could be limited from here. There could be some downside, but you're potentially playing for the upside. So you'd like to be part of the uptrend. What are the stocks that will take the Nifty higher from here on?
See, I think a lot of people have been questioning the valuations. Honestly, we've come to a point where valuations are very comfortable. I mean, I'm not a fundamental analyst, but what I hear and what I read and what my team tells me, I think at current levels, we are pretty much at average valuations. And therefore, if there is one pocket that can really surprise on the upside, it's the financial services. I think there is a financial services index, which has banks, NBFCs, and insurance companies. I think we like that entire pocket. Bajaj Finance, as you all know, has been a favorite for a while now, and happy to see what it's doing today, and I think it's going to get better from here. And some of the top banks like SBI, SDFC Bank, ICICI remain at long-term support. So I don't see much damage coming in there. And if these three big boys were to start doing well from here, I think the Bank Nifty and the Nifty will do well. So the broader financial services basket is something that we are betting on if the market has to recover from here. I just want the Nifty to take out 23,350. I mean, that's my only marker number on the upside. Once that is cleared, I think the bulls take some control. On the other hand, auto is another space that we like. Real estate, I think, has a very good risk reward. And I think metals is something that we've liked for long. And I think the downside from here is limited as well.
Okay. On that point about the budget, I know it's not a technical price action question, Gautam, but isn't the mood sufficiently bad that even if the budget were to disappoint, that should not act as a fresh trigger for a sell-off?
Markets are all about expectations and discounting. And because the expectations are so low, given all that has happened in the last couple of years and the double whammy that we got last year, that I think that 1st February can only get better. And with the markets open, it better be better. So I do believe that, since our issues, the slowdown and earnings, the downgrades and all of that has been homegrown, I think the government has a task. And I hope over the next couple of weeks with the budget and the RBI policy, any positive surprise and the market will lap it up. And I think you will see the change of screen instantly.
It's that season where everyone's trying to predict the mind of the finance minister. I was speaking to someone, from the tax world this morning, and they were saying, no, it's going to happen. The middle class has not gotten anything so far. It's been either the upper class, because the surcharge rate was lowered, or the people at the bottom of the pyramid. Middle has got nothing. They're saying it's going to happen this year, Nigel.
The chatter on social media was quite interesting. I put out some F&O data now. People are replying to me, Nigel, are we going to see the Nirmala ma'am candle? They're calling it the candle. In case she doesn't disappoint, then they're talking about, this is a new one.
Nirmala ma'am candle.
Candle, yeah, the upward candle. You talk about that one.
It has to be bullish candle, though, not a bearish
candle. A lot of people, and some of them are not replying on Twitter, they're replying personally as well. So I was like, this is a new one. And these are 2 sessions ago, so for them, actually that candle is taking place. Thoda upar.
Gautam, my question was actually the opposite, not whether it will surprise on the... My question is, if there's nothing in the budget,
then will we fall more?
Can it act as a trigger for a fresh fall? Because the mood is bad. That was my question.
It looks unlikely, Prashant, because I think most of the negatives are now in the price. I think the kind of decline that we've seen in the broader markets, there has clearly been panic on the screen. The bread data is terrible. Percentage of stocks trading off the 50-day moving average, 200-day moving average. Yeah. And, we handled capital gains and STT so beautifully last year. If we can handle the worst possible news flow, that's probably the reason I'm saying that it can only get better. It can't get worse.
Okay, I love the optimism this morning, Gautam. So I think all the bulls are going to be with you, and they will wish and pray that what you're saying really comes through on the budget as well. But getting back to that thesis, because your thesis is 20% up on the Nifty next 18 months, so it's a great time to start building portfolios. Tell us what would be your top longs then in that case?
Well, as I just said, that financial services is something that we like. I think, if I'm not wrong, the Bank Nifty now trades at a PE of about 13, 14. Many of these stocks have been hammered without no logic, and they're all trading at beautiful long-term support levels. So I think financial services will make a top comeback, followed by the IT sector, which I think has seen a lovely breakout on the ratio charts. And I think they've been quite resilient. I'm referring to the top IT names. And I think auto as a sector, auto and FMCG, and even PSU, these 3 baskets, which have seen a very large fall over the last 6 to 8 months, can also come back. And mind you, if you look at the mid caps and small caps, they have been in a consolidation or a time correction for almost 8.5 months. They've come to a point where the risk reward for top quality mid caps and small caps is once again lucrative. Again, please look at the context of the rise in mid caps and small caps in the last 2 years. Many of these stocks were 3x, 5x, 7x. If after that they lose 30% from the highs, as a technician, I would still consider it normal. So anybody who got into the market in 2024 must be complaining. But if you have been invested over the years, I still feel that this correction is digestible.
Okay, all right. That's a good optimistic note to have just, days ahead of the budget. Gautam, appreciate it. Thank you very much. And now we look forward to connecting again. Let's see what happens on Feb 1, and then we'll pick it up from there. Thanks very much for the advice this morning. Well, that's, the Goldilocks research on the market. Market's absolutely flat. Nifty is doing nothing, just about 11 to 12 points up. Lots of numbers and lots of earnings reactions have been pouring in. So let's look at the next company. Blue Star is the next management on our show. The company reported a pretty good set of numbers for the third quarter. Revenue and PAT were in line with the estimates. Margins actually were above the street poll as well. Growth was led by the EMP and the UCP segments. We have with us Mr. Veer S. Advani, Chairman and Managing Director at Blue Star, joining in to take a couple of questions. Mr. Advani, great to have you on. So both the segments that I just mentioned, they've really been on a great curve. And even overall, if I look at the blended number, the revenue is up about 25%. The margins moved to 7.4%. So let's start there. Is this kind of a solid show sustainable, specifically on the margins?
So good morning. Thanks so much for having us, and thank you for opening with that. We've had a good quarter. I think you saw revenue grew 25%. EBITDA has grown 35% to 209 crores. EBITDA margin also improved. You would have seen EBIT improvement in segment 2. We moved from 7.1% to 8.1%. That was primarily on account of volumes and economies of scale. And then you saw in segment 1, which is our projects and commercial air conditioning business, very strong revenue growth of 32%. EBIT margin slightly lower at 7.6%, but holding pretty firm. We really attribute all of this to largely due to scale as well as controlling our operating costs.
What's really interesting, Mr. Advani, is that you've done so well in the unitary cooling products, division. Like you mentioned, the top lines have been good, the margins are good, but some of your peers in the industry, I was looking at Voltas's performance in the same segment, and they've faced a lot of margin pressure. So clearly the trends are different between different companies. But let's talk about the AC segment and whether you expect similar growth to continue. So for the year as a whole, what will the growth be? Or is this a bit of pre-season inventory filling phenomena that we've seen? And what should we expect from the AC business?
Room air conditioner business, as you know, is in segment 2. We have the commercial air refrigeration business and the room AC business. So as room AC is concerned, it was a good quarter for the industry. I think industry grew quite well. Blue Star also did well. I think a large number of our competitors also did manage to grow some market share. Blue Star on a standalone basis in Q3, we believe that our market share would have touched 14% for the quarter, which is an all-time high for us. We've been trying to get to 15% on an annual basis for a few years now. We're inching up there. Of course, on a full year basis, we will still not be at 14%, but we're very happy with the Q3 result that we had. Of course, there was pre-buying before the season started. That usually does happen in December, but we're expecting a good Q4 for the industry. Obviously for the full year, it'll be a strong growth because it was such a great summer. But on a ongoing basis, we expect the business to grow at about 20 to 25%. For the industry to grow at that level, and Blue Star should grow a little faster so that we achieve our 15% market share goal. Overall demand is good, and of course there's some headwinds around liquidity and a little bit of consumer uncertainty around spend. That's true of the entire all consumer products, but I think air conditioners have been an exception. We continue to see growth at this 20 to 25%.
All right. Hi, Mr. Advani. Since we're talking a lot about your competition as well, and no doubt your numbers look good. We're waking up today. Your stock is a little under pressure, but you have Voltas that's down 10%, and you have Whirlpool that's down close to around 20%. I need to ask you this. Would you have thought of, looking at maybe taking a stake in Whirlpool, since the promoter entity wants to, reduce their stake? 75% has come down to 50%. Now they're talking about 20%. And if you thought about it yesterday, today you're getting it 20% lower. So will you all be looking at it? Because you get 30% of some competition here in India.
So frankly, I think we've explained our long-term strategy to you and to the market. Yeah. We are a focused air conditioning, refrigeration, and heating company. We have global ambitions. We don't look at just India as a market. We look at the Middle East, the US, and Europe. So, but we want to stay focused in our area of expertise, which is air conditioning, refrigeration, heating. In that context, moving into consumer durables, a wider portfolio for the Indian market doesn't fit our strategy. And so we're unlikely to make that move. But like we do with everything, we're very keen to stay connected with the larger durables industry. So, we may have a look at what Whirlpool is about, but no intentions of an acquisition.
Okay. Got that. That's pretty clear, Mr. Advani. Good morning, Prashant here. There is just one more thing, not very specifically related to Blue Star, but right, and again, I'm bringing in the competitor Voltas here. How is the view now evolving of actually, outsourcing some of the manufacturing to making it in-house? Because Voltas moved it in-house. Could you give us a sense, some perspective? I mean, from an investor point of view, actually, if anything, it's not really helped them in that sense. How's the view evolving on this?
So, we have been a manufacturer for several years now, now several decades. So for us, it is part of our strategy. It is integral to our growth plan. I think that we've talked about this before. It is very difficult for any organization, Voltas or any other company, to transition from a buy-sell to an in-house manufacturing business model. But it is a transition that all companies are taking and need to take. So I think, as far as our competition is concerned, we expect that over a short period of time, they should get that whole operation under control. There's no reason why they would not be able to do that. They are an engineering company just like us. So I'm fairly certain that they'll get that right. I think it's the right decision that they have taken to move away from contract manufacturing to in-house manufacturing. There is value addition, there's quality control, there's inventory management, there's so many benefits of it. So I think it's the right decision they've taken. It may just take them a little longer to stabilize that operation. As far as we're concerned, our investment plans, we have two large investments that we're making currently that are underway. One is an expansion of our own room air conditioner production volume in Sri City. We're commissioning phase 2, and then we'll start phase 3 very soon. The other big investment for us is in commercial air conditioning. You may know we've not made a capex investment in manufacturing in commercial air conditioning in some time. So we are now doubling the size of our Dadra factory, where we manufacture VRF systems, ducted systems, and heat pumps. So that's another big expansion for us. So a lot on our table. We have to stabilize these capex investments. We're very focused on return on incremental capital, and that's where we'll stay focused for the coming year.
Okay, all right. So, Mr. Advani, then let's round it up with some numbers and maybe some projections that will help us map the coming year as well. Given that both the AC business, the UCP business and the EMP business, both have done so well for you and you sound quite optimistic, at a headline level, what is the growth trajectory? What should we expect by FY25 end? And blended margins for the company. I mean, I don't know if we didn't get a chance to speak about pricing and competitiveness, but if you could just tell us at the headline level, where do you see margins stabilizing by the time we end this year?
Sure. So it is a hyper-competitive market. Pricing is extremely tight, as you would imagine. Even though demand is strong, every competitor wants to add market share, just like we do. Everyone's made large investments through the PLI, as you know. So everyone needs to get that return in order to collect the PLI. So it's a hyper-competitive market. Pricing is tight. Having said that, on a full year basis, we've always spoken about segment 2 EBIT to be at about 8 to 8.5%. We're confident we'll do that. Segment 1 around 7 to 7.5%. Again, that should happen. We didn't talk about our projects business. That order inflow as well as execution has been good. And so that has also contributed to segment 1 performance. Of course, we're expecting infrastructure demand to pick up as public capex restarts. And we're also hoping that some private sector capex picks up so that we have a strong opening to the next year. I think as far as Q4 is concerned, we're well on track to execute our internal plan. Of course, a lot depends on when the summer sets in. You remember Q4 last year was a very large quarter for the industry. And so we're up against, we have a large base to build on, but we're confident about delivering these numbers. On an annual full basis, I think 20 to 25% is what we're aiming to deliver.
All right, we'll leave it there. Mr. Advani, thank you very much. Really exhaustive conversation and lots of perspective there. Appreciate it here on CNBC TV18 as always. Well, KPIT is the next one we're speaking with. The stock is up 7%. it had a painful last couple of months from 1950 or so to about 1250, which was the recent low in a few months, and back to about 1450 this morning. Now, strong set of numbers for the third quarter. In fact, they've raised their margin guidance by 50 basis points. But do note, the US business has been slow while Asia has been super strong. We have Mr. Sachin Tikekar, President and Joint Managing Director at KPIT Technologies, with us to take some questions. Sachin, good morning. Great to have you with us here, and congratulations on an overall strong set. So you've raised your margin guidance by 50 basis points. Could you tell us what led to the improvement in margins from 20 to 25% over the last 6 months? And what should we expect on a steady state on EBITDA margins in FY26?
All right. So thanks for having me, first of all. Last couple of years, we've been making investments in improving our productivity through artificial intelligence as well as some of the other tools. Secondly, the business mix, more of licensing. These are the two things that we've made investments in over the last couple of years. So some of it is coming to fruition, and that gives us the confidence that, to increase the guidance that we have given earlier on to be, north of 21% in terms of EBITDA. Going forward, you know how the automotive and mobility industry is. These are turbulent times for the industry, and everybody is all the car makers and truck makers are trying to figure out how to remain competitive. So there, we do expect that in general, they would expect all their partners to do more with less. In order to deliver more with less to our clients, we'll have to remain focused on artificial intelligence, building more solutions so that we can deliver solutions to them in a faster manner with greater value at a lower cost. We'll try, the effort obviously is to try and do that without impacting our margins. So that's what I could say at this point in time.
Okay, that's useful. But two things. One, will you be able to get to the upper end of the margin, 22% in 26? And second, it's related. From what I've heard, probably not, right? The effort will be to maintain it where you are now, because there seems to be do more with less. There could be some pricing pressure, etc. Are you seeing that?
We have not felt it. In all honesty, I think we have given a higher guidance because we have not felt the pricing pressure, but we know what the OEMs are going through. And as a long-term trusted partner, we are trying to make every effort to see how we can save costs for them. Not just, the cost, the money that they pay to us, but overall cost of their vehicles, and try and make them more effective and efficient. It all depends on how quickly we are able to build solutions and make that transition from a typical services business to a solutions business. So our hope would be to continue to improve the margins like we have done over the last 18 quarters or so. But we'll see how things unfold. I think from the global OEMs perspective, we'll have the quarterly results coming out now for the most of them. Some of them are out as of yesterday, but we'll see more of them over the next 1 or 2 quarters. 1 or 2 weeks. So we'll have a better feel in terms of their strategy, and we'll continue with our long-term efforts to make sure that we deliver greater value to them at lower cost without compromising our margins.
Sure. No, Sachin, it's really commendable. I think 9 months you have already grown the top line constant currency at almost 21% in an environment which has been challenging, where Europe has been going through all kinds of slowdown issues, etc. In that context, let me ask you, the Asia business is really picking up for you. I think you've highlighted that in the commentary as well. Quite a few of the regional markets which you're optimistic on. So is this a conscious sort of tilt that you're chasing more business in Asia and more of the Asian automakers versus Europe, or how does it move? And then in Asia, we had the big headline, right? Honda and Nissan, the joint ventures. So I don't know how much work you're doing for them and what such a consolidation means for a company like you. So if you could throw some more color on this whole Europe versus Asia mix.
No, I think it's a great question. And obviously, the numbers for Asia look tremendous when you look at year-on-year growth as well as quarter-on-quarter growth. It doesn't look all that great when you look at the Americas and Europe. I have to say, so we believe that Asia will be our key growth driver in future as well. Having said that, I have to say that some of the business that we are doing for some of the European OEMs and some of the OEMs in US, we do it and it's run out of India, and that gets booked under Asia. So it's not how it appears necessarily. I just want to say that there is a little bit of a normalization to be done in terms of when you look at the distribution across the geography. Having said that, we truly believe that the growth will come from Asia. And I will come to Honda and Nissan potential partnership. But let me just say this. I think our deep closures have been higher, more than 20% quarter on quarter, which is good news. And the pipeline also is looking much better. And I just want to give you a sense. The highest pipeline is actually from Europe, followed closely by Asia and America. So what you've seen this year in terms of our geography mix is likely to change next year. I think they are likely to have more balanced growth across the three geographies. I hope that answers the question.
Yeah, it does. It does, Sachin. And just a follow-up question, since we're talking geographies, yes. US hasn't been growing that much for you, like you acknowledge now. But we have a new dispensation in place, and Mr. Donald Trump is all about firing up, the US auto industry. So again, just want to understand what your current relationships are like and how you would perhaps try to, build on that opportunity. How are you looking at US auto?
Oh, absolutely. And we believe that, so there are two things. One is what the new administration in the US has said, that they want to give more choices to the consumers. What kind of powertrain they pick, whether it's battery electric vehicle, hybrid vehicles, or conventional powertrain. I think that's something that the administration has made very clear going forward. What it means is the OEMs will have to invest, depending on their target market, which powertrains they're going to invest in. And we believe that most of them will invest in multiple powertrains. That means there is a greater opportunity for KPIT to help the OEMs based out of US, to work on multiple powertrains. So that's great news from KPIT's perspective. Secondly, we also believe that the new administration is pushing for more manufacturing to be done in the US. That means the global OEMs will also have to invest more in the US market and increase their manufacturing. That also creates greater opportunity. So we are quite bullish. That's one reason why we are bullish on the US. The second reason is we started to invest in trucks and off-highway last year. And the off-highway businesses started to show some green shoots. And we believe that in the second half of next year, we'll see some growth coming from off-highway, specifically from the US. So that's how we really look at net. We do believe that our business will increase in the US and Americas, and we'll have far more balanced growth than what you see in the current year.
Sachin, just last point, how can we not talk about China, right? China has been all the talk of the town with everything which has been happening. Last time you were on, you were saying that by the end of this financial year, which is FY25, that strategy for China, you said, and China for the world. I mean, in terms of what you're doing there will also kick off. Could you tell us what's happening there?
Absolutely.
Yeah, sorry, go on.
So thank you for that question. And we need to talk about China when we talk about automotive. What has happened is in China, the global automotive, many of the global automotive who were present in China was their number one market. And that's not the case today. So our strategy is to work with some of the Chinese OEMs, also to learn about China innovation, China speed, and also, the ways of doing things. I think there is a lot that we can learn, and we can actually apply those learnings for our global OEMs so that they can become competitive. China, over the last 40 years, they've learned from the rest of the world quite a bit, and they've made some of the things much better. I think it's time that we open our eyes and look at China in a positive way, learn from them, and see how we can help our global OEMs. So that's one part. So we've started working with some of the Chinese OEMs locally to see how they work. And also there are ways through which we can create value for them. So that work has started. We just want to be mindful about, how much we take on in China, because it's a different speed, and the expectations of the OEMs there are very different. So we're going to take one step at a time in China, and that's going to be the mantra getting into the H1 of next year, and we'll see what that means in the H2. So we are keeping our ears to the ground to see what is actually happening in China. And at the same time, you hear a lot about trade barriers from the US. 100% tariffs and all software related to automotive is banned now. You've seen increase in tariffs in Europe and some of the other countries. So we also have to make sure that we have a strategy for China, and then there is a strategy for the rest of the world. So we have to strike the right kind of balance between the two. Make sure that there is a rounded growth.
All right, absolutely. A great conversation, Sachin, and thank you for all that perspective on your business and your business in the context of countries and geographies like China, etc. I think we'll hear more about that market as well from you in the coming quarters. Appreciate it. Stocks up about 6% or so. We'll take a quick commercial break here. Next up, you'll hear from the management of Hitachi Energy India. They reported numbers as well. Stocks corrected. High quality name. We have Mr. N. Venu, MD and CEO of the company, on the other side.
Welcome back. Well, Hitachi Energy is a stock that's surging in trade. They reported a good set of numbers. Revenue surged up by 27%. You had the margins that expanded as well. To detail the past quarter's numbers, and more importantly, what's the outlook, particularly on HVDC, and what's the pipeline out there? We're joined by the Managing Director as well as the CEO, Mr. Venu, who joins us on the show. Hi, sir. Good morning. And always good to speak to you. Congratulations. Margins back in double digits. Will it hold at these levels from here on? I recall when I visited you in Bangalore, you had said it's heading over there, and it's happened. So should we get used to now margins continuing in double digits? And also I wanted to ask you, in terms of this HVDC orders, that's clearly started coming. It's more frequent than what we have seen in the past. And as you said, the pipeline is there. There are 2-3 orders in store. By when should we hear about the outcome?
Yeah. No, I think good morning, Nigel, and it's a pleasure talking to you always. Yes, this quarter has been a very solid all-round performance in all metrics. Our orders have surged almost, high triple digit, 838%, and driven by a large HVDC contract. And revenues are 31% higher, and our margin EBITDA improved by 380 basis points. And our exports have gone up, and our other lever for growth, service, has done well in this quarter in that. Overall, I would say that this quarter has been extremely good in all the KPIs. And as we have been saying about our margin guidance, I think our endeavor is to see that we improve our margins on a quarter-on-quarter basis, or at least hold on to that. So that will remain in that. And coming back to the HVDC, as you know, that energy transition is a huge tailwinds in India. And as a country, as part of the National Electricity Plan, NEP, they want to add another 30 gigawatt of HVDC lines. And that creates a huge amount of pipeline from now until 2032. In addition to what we have won, we see at least another 3 projects are are under bidding stage, and we will be also, bidding those things. And if you recall, we have been saying this at least last 2 years, and not only saying this, but we have taken a lot of actions in localizing, our portfolio, localizing equipment, opening our new factory for HVDC in Chennai. All those things are now started bearing the fruits.
All right, got it. So, Mr. Venu, as you said, now you're expecting margins to hold in this vicinity and improve from here on. Is that correct?
At least hold on to that. We don't want to give a further guidance on that. Hold on to that.
All right, I'll have to push on the HVDC path then. As you said, there are a couple of announcements that could be due on that front. And now it's not a big HVDC order in 5 years. The tenure as well, the frequency has increased. Adani, I think they were selected as the developer for one of them, and they're looking for a partner. So, places you well. And if I look at the global backdrop as well, Hitachi, the global company, has been bagging larger number of orders, particularly the one in Europe, in comparison to Siemens. So that places you quite well. What are you all doing so differently that is putting you all in pole position? And on these orders, the Adani order, the Leh Ladakh order, the HVDC order, should we expect it sometime in the second half of this calendar year to know the outcome of that?
Yeah. So I think HVDC technology, this is a technology we have invented 70 years back. And since then we have been, investing in this. This technology, you need a lot of investments required to ensure that you are up to date on the technology, bringing the footprint, low losses, all those things are extremely important. And we did the same thing in India also. And in India today, we almost manufacture or we almost execute this project end to end in that. What we are doing differently is basically, we are localizing it, we are updating it, we are creating the ecosystems in India to execute the project end to end in that. Today, around 16 HVDC links, including the new one. Out of that, 8 are being done by us. So that clearly shows that we are at full position when it comes to the HVDC technology. And this is also true for globally. Globally, we have done almost 150 gigawatt of HVDC links around the world in various parts of that. And we have been investing, and we continue to invest in this technology in that. When it comes to your second part of the question, I think we at least one more project will get awarded in the next 3 to 6 months also, and maybe another project in the second quarter of second fiscal of the next financial year is what we are expecting it.
Okay, so another HVDC award probably in 3 to 6 months, and the subsequent one in the next financial year. So you mean FY27, sir?
Yeah, this award means the customers will award. It's not that we get everything. The customers will award one project in the next 3 to 6 months, and one more project in the second 6 months, second half of the next financial year.
Got it. Okay, so now this becomes really important for us to understand. I mean, look at the stock, by the way. Stock is on 20% circuit. And even though the market anticipated this big swell in the order book, right? We knew about the HVDC order, but still the execution and the rest of the parameters have also hit the mark. Mr. Venu, so if we talk about your order book, total order book, I think you're almost at about 19,000 crores along with this wins.
That's right.
How much is ex-HVDC? And so let's take it step by step. And then you're saying another 6 months, assuming if you get something there in that award, how do you see the order book position moving, the total order book, and also ex of HVDC? And then we need to understand revenue recognition, because these HVDC orders are very big. So what is the timeline? When will you start recognizing revenue from them? So help us understand both the way the order book will move and how the revenue will start reflecting this.
Right. No, I think, again, thank you very much for your questions. HVDC orders are pretty long gestation period. It'll go from anywhere between 48 months for first half of the things, and next 54 months. That's where we do. The bipole one, 48 months, and 54 is bipole 2. But the revenues will start kicking in slowly after 12 months, slowly, but it'll actually get momentum will come in the second year and third year, and that's where is the thing in that. We don't give the split of our order backlog of close to 19,000 crores. What is HVDC? What is not there? But I can tell you that our order inflow this quarter also, excluding HVDC, also has a high double-digit growth. So that clearly shows our focus on our base orders, our high growth segments I was talking about, the renewable and data centers industries are really growing in this quarter as well.
Got it. So X of HVDC also is growing well. But now the second part of my question, understanding revenue recognition. You said the revenue will start getting booked 12 months onwards. So then help us understand, slowly, gradually. So now help us understand the revenue profile. Some idea of where you might be at the end of FY25. And I'm guessing in FY25, HVDC is not even getting booked. And then FY26, 27, when it really starts showing up in numbers, and what's the kind of delta? And I'm guessing it's going to be a big delta that we'll expect on the top line.
Now, FY25 this year, also we have a revenue from HVDC. That's a Mumbai HVDC project, which we have booked, 3 years back. So that's part of the revenue has come in that. So remaining revenue will also come in the next year, and some part of the revenue for the order which we have booked also will start kicking in into the next year.
What's the revenue growth for this year? Top line growth with all these orders and the additional revenue being booked.
You recall, we don't give the forward-looking statements. What all I was just trying. We have been creating the order backlog, and we are sustaining this order growth momentum, and naturally the revenue is offshoot of those orders. You get the backlog and you execute it and you get the revenues. And our focus has been, if you see in the last 3-4 years, to consistently create the highest ever order backlog, and this quarter has been highest ever order backlog, close to 19,000 crores.
Got it. I know you don't say good morning. I'm sorry we had more questions, but we're out of time. But I'll just keep it simple. I know you don't give a outlook, but you can agree or disagree, or agree strongly or disagree strongly. So 24, and because it's a high quality name, stocks corrected, and people would want to know, because on a trailing basis, stock seems very expensive. Not your business to talk about the stock, and I don't expect you to. But so 24, I think you did about 120 crores in profits. 25, about 320 odd crores. I'm not. I think that's the expectation. And 26, it's just under 600 crores in net profit. So we're talking about very big jump in that sense. Sounds in the ballpark, correct?
If the revenue comes up, rest of the things fall in, Prashant. So I don't want to say yes or no for that. Or if you see here, our 9 months revenue from this year is 4,500 crores. If you add all the 3 quarters put together, which is quite a high, almost 25-26% growth on the cumulative 9 months. I think our thing is to sustain this revenue momentum, and that's exactly what we are looking at it.
Okay. All right. Next time I'll ask. We'll ask more in terms of the business. So very interesting space, and of course with the budget around the corner. I think I'd love to have your reaction post the budget as well, which is of course this Saturday. Thank you very much for joining us and running us through some of that commentary. We'll take a quick commercial break here. We'll come back. So lots to discuss, commodities with Manisha and more when we return. Welcome back. We've got the market, of course, is doing what it is. Tata Motors is under pressure. It's seeing some pain, some downgrades, etc., coming through as well. In the conference call post the earnings yesterday, P. Balaji, the group CFO, told CNBC-TV18 that the China demand situation is affecting the entire industry at large. He also spoke about their business in the US and UK as well. Listen in.
China demand situation is more coming from some of the retailers getting into financial stress, and therefore that's impacting the entire industry at large. And as the retailer financial situation starts improving, we should expect to see China back to growth in the coming quarters is what I would hope for, and that's what we believe is likely to happen as well. As far as UK is concerned, the main one that we need to plan for is earlier we used to have challenges with respect to getting insurance in the market. That is now behind us. We are now seeing insurance availability for people starting to improve, and therefore I do expect Q4 to be UK starting to normalize. At the same time, we are seeing strong growth for our products in the US, because we delivered almost 44% growth in the US, and that should again get back into help us manage some of the pressures that we are seeing particularly in China.
All right, that's Tata Motors. Stocks been under pressure. Speaking of stocks under pressure, Whirlpool is topping that list, still down 20%. That's because the global parent is looking to cut its stake in the Indian entity. Hormaz back with the details. Hormaz.
Big news coming in this morning, right? Whirlpool now parent company, of course, Whirlpool Corporation, planning to bring its stake down to 20% by the mid of this year or by the later half of this year is what the company said along with its earnings announcement overnight. And at the start of 2024, they had a 75% stake in the company. Then in February, they sold close to 25% stake in that block deal. And now they are planning to bring that stake down further to just 20%. Now, if you remember, in February of last year, there was this 24% block deal that took place that was valued at over 4,000 crore rupees at an average price of just around about 1,280 rupees a share. And Whirlpool Corporation said that they are going to use these proceeds to pare down their debt and to strengthen the balance sheet at the parent level. And Whirlpool's CEO, of course, the parent company CEO, Mark Bitzer, was on air on CNBC on the 27th of last year, and he mentioned that they are only taking money off the table with the parent Indian entity trading at around 50 times and the parent company trading at just around at much lower valuations compared to that. And that still stands because even at the current price, the FY26 price to earnings multiple for the Indian entity stands at around 41 times and the parent is just trading at around 9.5 times. And since then, the shareholding changes that have taken place after the promoter pared down stake, mutual funds have increased their stake substantially in the company with the stake that was sold. The stock as well, at that time during the block deal, was trading at around about 1,300 rupees. Within the next 7 to 8 months, it made a high of around 2,450. But if the promoters, whether the question being whether the promoters have missed a trick, because the stock is now down 35-36% from those levels and add another 20% in today's session as well. So the stock indirectly is now trading below the levels of the block deal that took place in February of 2024. So the street not liking it, another overhang created, the stock down 20%.
Okay, all right. Got that, Hormaz. Thank you very much for the details over there. Let's quickly shift focus to the commodity markets. We have Manisha joining in with the latest. Manisha.
Thank you for that, Survi. Well, these are the markets that are still awaiting clarity as other asset classes as well. So it's ahead of Feb 1st, and we're looking at very choppy markets here. I'll start with what the street is anticipating, and there are various statements on whether or not on 1st of Feb we are going to be looking at those 25% tariffs on Canada and Mexico. If that is happening, is it happening at the same quantum that is being talked about? That is a big uncertainty there. In the meanwhile, when you look at the crude oil prices, we have continued to decline onto this one. We are trading at the lowest level since 2025. For the gold prices, we're not too far away from all-time highs. So all that uncertainty has led to safe haven buying coming in for gold. And when it comes to metals, well, we have seen a decline because the global PMI numbers have been on the weaker side. There are demand fears globally if you do see those tariffs come in. I want to take you visually through on what we've seen in sense of many of these commodities in last few years. I'll start with the crude oil prices, and that big gain came in at 2021, 53% on the higher side. Since then, a plus minus 10%, and then a plus minus 2 to 3% is what we've seen until now. So all those gains that we saw in 2021 is what we seem to be holding at. After that, we haven't done much. Same is the case really coming in for copper as well. 2021 was a huge year for all of those commodities. So we saw 26% of gains then, a decline, a plus minus 7% and a decline there. So as you can see, after those kind of gains, we haven't been able to see very strong numbers there. Last year, of course, copper saw all-time highs, but since then it has been a one-state decline. That's aluminum for you, and we are dealing with shortages right now. But even with that, the last couple of years, last year for that matter, hasn't done much. We're looking at alumina, bauxite trading at all-time highs. But has a lot of demand come in for aluminum? We haven't seen that. The huge super cycle that we talk about, or the EV demand in the global markets, clearly hasn't supported many of these metal prices. In case of aluminum also, 2021 was a great year, and after that, we only have seen a decline. Not so much support in last many years when it comes to iron ore and steel. We are looking at constant increase in production there. So as you can see, 2021 was a weak year. 23 we did see some gains, but 24 actually washed all of that out. And this year we've started on a weaker note for this one as well. Final chart comes in for nickel, and while a couple of years were great for this one, since then we have seen volume decline, demand decline, and many of these EV markets actually have moved on to proxies and substitutes. So nickel clearly in oversupply there as well. So many of these metal prices are actually waiting for cues from US in sense of tariffs, better data from China. Until then, this perhaps could just about continue.
All right, Manisha, thank you very much for that. So that is commodities as always, primer there. We take a quick break. It's our special segment. It's the economy. My colleague Lata will be speaking with Stephen Englander of Standard Chartered and Neeraj Gambhir of Axis Bank on the overnight Fed decision and, of course, the upcoming RBI meet next week. Stay tuned.